within the metals market and the kind of volatility and the ebb off that you have seen, whether it comes to steel or, for that matter, iron ore as well. Let's welcome on board Brij Bhushan Agarwal, the MD and VC at Shyam Metalics Energy, joining in on the show right now. Mr. Agarwal, great to have you on the show. Just looking at steel prices, they've cooled off quite a bit in the last 2 months. But would you say that it's an aberration, or has the tide completely changed, and will we see steel prices softening further now?
See, if you see in the past, we have always noticed that steel prices has been very much dependent on the price of the raw material. We have seen in last couple of months, the iron ore prices, there is a huge corrections in the iron ore prices. And similarly, if you see the last 3 weeks, market price of the coal and all also have also softened up. So basically, yes, we have come to a very, very low level of the price, because there is a lower demand in the international market, and metal, as we know that, it's too much dependent on the international pricing. So further down, I don't think there is going to be a very major correction in the prices, but yes, for a time being, with the kind of prices, what we are seeing in the raw material, with the kind of market, the European market, the demand is, lowering. We are seeing the HR prices also going down. So, but we have come to a very substantial corrections, and henceforth, I don't really see a very major downfall in the prices.
Interesting. Even for iron ore, as we understand, that the prices have tanked in the last month or so, but they have recovered marginally, as we understand, since the last time we were speaking with you. What is the expectation when it comes to iron ore prices going forward?
The iron ore prices are going to remain, soft, because it all depends on the supply and demand, and we know that the supply is now regularized, and with China cutting down the steel production, the demand from the Chinese market, which dominates the iron ore prices, have also affected the prices of iron ore. So I don't really look forward, any big corrections downward or upward. I think this should be a very, very stable price from the iron ore prospect, because if you see from almost more than 30-40% corrections we have seen in the iron ore prices. So I am pretty optimistic, like this is a good level of iron ore as a stable price.
What happens to an integrated player like yours? You have access to iron ore, you've got access to power. If prices come down, do your margins come down? Or because you're integrated player, nothing changes?
See, for a time being, yes, because you are carrying on the inventories, you have a carryover inventories, commitments and all. So once you see the top prices, the sales value come down, it definitely impact in the short term. But overall, if you see from the delta prospect, like the iron ore prices are coming down, the finished market prices are also, corrections is happening. So it affects, but in the long term, I would say it will not affect in the major way. But yes, in the short term, definitely there will be some effects on the margins, on the pressure on the inventories and all.
Quarter for the steel industry, the realizations on an aggregate basis will come down, because November prices were down, October they were high, November they were down, December they were flat. So on an average for the steel industry, the realizations will be lower than Q1 and Q3?
Probably yes, because we are seeing there is a huge correction happening in the market. So definitely there will be some revision happening in comparison with Q1 and Q2.
The coming quarter, which is Q4, let's say Jan to March quarter, do you think you will be able to increase prices, or you are happy even if prices remain stable?
See, if you see from our prospect as an integrated player and very distinct, product what we have in our basket, like we are into the specialty alloy, we are on the bed of the coal, near the mines. We are more on the domestic coal. We are not dependent on the international coking coal. And with the kind of business we are, it's 100%, we have never seen a long product getting, any import in the country. So as a company, I would say there's nothing to worry. We don't have any leverage. We are working, have a good cash in our business. And the margins, the business, what we are into, like the kind of product what we have, I don't see there is going to be a very, anything which has to be of worry.
One is price, second is demand. So prices are a function of international pricing, availability, even price speculation on in the exchanges. But what is happening to demand? Has the demand also come down for you and for the industry from Q2?
See, there once the price goes down, there is certainly some effect on the demand, because in these businesses, people generally sit on the so wait for the price to get stabilized. And definitely always on the international side, the kind of news on the demand side, on the price, psychologically it affects. So it is just a temporary phase, I would say. But in the time to come, with the kind of project what we are seeing in our country, the development what is happening, I don't see there will be any issue from the demand side. So we are seeing a lot of projects happening in the government sector, in the private sector. There is a huge turnaround in the real estate businesses. We are seeing a lot of development happening in the rural markets. In the defense, Sagar Bala Yojana is becoming very active. So NHI is also, doing a fairly a decent project. A lot of industrialization, development is happening across. So I don't think, with the kind of production what we have in our country and the kind of developments and the spending what is going on, there is anything to worry from the metal or any steel sector.
Good morning. Now, if there's been one buzzword which has been impacting energy as well as infrastructure development, has to be ESG. And that has been a global trend which has led to disruptions. It comes at a higher opportunity cost as well. Can you tell us first, at the company level, how are you approaching this?
It's a very, very fair question. Yes, as a good company, definitely we are on our job. We are trying to reduce the CO2 percentage in the company. We are working on the new technologies, replacing, doing a lot of homework on the reductions of the carbons, utilization in the plant. We are seeing how to optimize it. So we are on the job, and in next, uh, next quarter will be rest of the consultants are now will be on the board to advise on more larger platform, and we'll be able to share a decent picture on the ESG front.
Okay, so Shyam Metalics and Energy, maybe in the next quarter, will be sharing what their plans as far as ESG goes. Looks like work is underway. But Mr. Agarwal, the other question I have is, when you were just answering Nikunj, you talked about how the demand is going up because of the real estate sector, rural development, Sabramala, etc. So can I ask you how that is impacting the company, in the sense, are you planning to increase your Capex? Are you looking to add capacity?
As on date, whatever capex we have, committed in the past, around 3,000 crores, these are all very much under track. As of now, we are still, we have not decided to increase further because we want to normalize the earlier capex plan. But in the time to come, maybe, there will be some that change for better, which we will like to share once we are through with our internal boards and feasibility concerns and all. But yes, things are going to look on the better side in the time to come.
Right. Mr. Agarwal, great to have you on the show. Thank you so much for taking the time out and joining in today.